What we're going to talk about today is why technical analysis won't make you a successful trader. And this video is going to be for the people who are looking to trade. They're not having a lot of success, and they're trying to understand how come the technical analysis that they learned isn't really working for them, right? And really quickly, I'm not against technical analysis. I've had people on my channel, but also included in my course, that utilize technical analysis. I think it's something that's very important. However, I think that the perception of technical analysis by amateurs, by people that don't have a lot of seasoning in trading, is wrong, and it often leads them to not get the result that they desire. And what we're going to do is kind of examine why, as a person coming into this particular space, or as a person that has not had a lot of success, why you believe that technical analysis by itself will solve all your problems. So that's kind of who we're going to be talking to. Now, this video is going to be for people that are open to kind of understanding what's really going on in the trading space. We're going to kind of go into why so many people are attracted to technical analysis, why it clicks in so many people's heads. However, what I want you to really understand is that the goal is to try to help you become a better trader so you can get the life that you desire, not make you a disciple of a specific, I would say, tool or process. It's to really try to help you get a comprehensive understanding of what's going on around you so you can get the success that you desire, not make you adhere to what I say is what's going on, and that's how you have to trade. And I want to kind of get you to understand that. So really quickly, right, we're going to go into the particular sponsor of this video, of this broadcast. That's the highest paid part-time job in the Real Options Trading Academy. And then we're going to get right back to the broadcast. So let's go ahead and go into that. www.highestpaid.online is having a VIP sale with a special bonus. You're going to get 15% off using the code AUG15. This sale will end on 8/29. The special bonus is going to be a PDF titled "Don't Make the Biggest Investing Mistake of Your Lifetime." And this PDF is designed to help you avoid losing out on thousands or millions of dollars of investing returns by not understanding how to ask the right questions and therefore not being able to receive the right answers. What you want to do now is go to www.thehighestpaid.online and get access to this sale before it ends on 8/29. That's www.highestpaid.online. Okay, so let's get right back to it. Now, what I want you to do is I want you to look at this real quick. And if you're watching online, if you're watching this archive, tell me what you see, right? You should be able to look at this and explain to me, what are you looking at, right? Because one of the biggest challenges that a lot of people have is that they're investing in something called technical analysis that may be based on a discernment that they may not have. And there's certain things kind of based on how you're constructed psychologically, also based on your training, based on what you've been exposed to, will allow you to see certain things. But everybody's brain doesn't work the same, right? And so I want people to really understand there's things that I may be talented in that you may not, and vice versa. Okay. So if you're looking at this, you should be able to tell me, what are you looking at? And then based on what you're looking at, then you make decisions based on the information that's being presented in front of you. So what you're looking at is you're looking at essentially a pre-snap read for a quarterback, right? So that's the quarterback, the running back, tackle, guard, center, guard, tackle, the two ends, the two tackles, the middle linebacker, weak side, strong side linebacker, the corners, the X receiver, Y to Z receiver, free safety, strong safety. The quarterback's supposed to take this particular pre-snap read and then understand, right, based on the information that's being presented in front of him, where he wants to go with the football, right? And so people that really look at a lot of football, they've looked at this type of stuff over and over and over and over and over again, because what they want to do is make it to where when a quarterback goes up to the line of scrimmage, based on their pre-snap read, they have a good idea of what type of defense they're running and they know where to take the ball. Okay, let me give you another example. If you're riding around the city, the question is, do you ever notice landmarks? As you're driving around the city, are you oblivious to landmarks? Because there was a time to where people moved around the city and they didn't have GPS in their car. As you're driving around the city, are you oblivious to landmarks? Do you notice that when I go to this part of the city, there's this big building here? And so I know where I'm at because I know where the building is at. Or there's this restaurant on the corner or in this part of the city, so I know where I'm at because I know where this restaurant is at. Therefore, if you drive down that street at 2 o'clock in the morning with no lights on, you know exactly where you're at, because why? Those buildings are still there, right? And I think that's what a lot of people, and I noticed because I know a world before we had GPS in cars, many people struggle with driving around the city, especially if they didn't know the area, because they cannot recognize landmarks. They can't. They don't have the ability. Other people will tell you, I have a bad sense of direction, which is unusual because we know that the sun always rises and sets in the same direction every day. So you know where you're at based on where the sun is at. You don't have to go to the military or be in the Cub Scouts or the Boy Scouts to understand that, right? You have to understand. So that's what I want people to realize, is that people often should ask themselves these questions about what they're currently going through before they start buying into technical analysis. Do you have the ability to discern what's in front of you based on what your eyes are seeing, right? Before you ever start investing in technical analysis. Okay, there's another question. So here's some technical analysis diagrams. Okay. One of the reasons why people are given this, in my opinion, is because it gives them something to do. And it kind of gives them something to dedicate their time to. However, people need to ask themselves again, do you have the ability to look at something and tell what's going on? Take the market, take the market out of it. In your real life, can you view something and see it? So we're in a world where most people walking around with their head in the phone, with their face in the phone. Most people, when you get close to them, they look down at the ground. They don't look straight ahead. They look down. So my question is, why do you believe your eyes even work then? What makes you believe your eyes work when you don't use your eyes in any other part of your life? So now all of a sudden you go into the market and you believe your eyes work. Well, why would you believe that? Because you don't use your eyes in other parts of the world. You use your eyes to the minimum. You're driving, you're looking at a screen to tell you where to go. You're not even looking out of your car window. You are in the natural environment and you got your face in a screen or a phone, right? So you still don't really lose your eyes to recognize things. So then now you go into the markets and you believe, well, I can just recognize this pattern. I can trade successfully. Well, you don't use your eyes to recognize things in the other part of your life. So why do you think that works here? And I think that's something that people really want to start to examine. How do they come up with these assumptions about themselves? Okay. Because people will come to me and say, I need to learn more about technical analysis. And my question is, well, why do you believe that? Like, do you know when technical analysis was even developed? Do you know people were trading successfully before technical analysis ever came out? So how did they do it without technical analysis if it took place before technical analysis? So you may believe that it's an accessory or it's a process improvement, but many people are just depending on TA, what we call a technical analysis, to be successful. And they're learning more and more and more about it. But I think there's a lot missing to them to why they're not able to get the success that they desire. So we want to ask, come up with this problem. So the problem is that you learn technical analysis, you still can't trade. You've learned all the diagrams and all these things here, and you still can't figure out how to successfully trade even a month and be green, right? So you've been trading for 2 years and you still can't get a green month out, which is very unfortunate. And then you're going and just learning more and more and more and more diagrams. But in your real life, you can't recognize diagrams. You can't recognize patterns. You can't recognize, I forget what you call it. It's when you have good depth perception in the real world. It's something a lot of really good quarterbacks have. You can't do any of that in the real world, but now you jump into the markets and you think that you're going to be able to do this stuff in the markets. And I'm just trying to figure out what made you believe in this particular space so deeply when you don't do this in your regular life outside of the market, right? So that's your problem, is that you can't learn technical analysis. When you learn technical analysis, you still can't trade. So what's the solution? Start with the end in mind and then backtrack to why you decided to only depend on technical analysis. Okay. This is a way you can figure out how to solve most problems in your life. Start with what you want the end result to be. So what is the result that you want, right? What action did you decide to take to get that result? What were the actions that you decided to take to get the result? Right? Most people take actions and don't even know what result they're getting for. So what I would encourage people to do is start with the result and then figure out what actions you need to take to get the result. Right? but that takes actually sitting down and putting some time into it. Most people they're not interested in that. They rather have somebody tell them this is what you need to do, and then they just do it, so then they don't have to own their own results. But the question is that what result did you want, and then why did you believe that I needed to learn technical analysis to get that result? Okay. So here's the next thing. Were you attracted to technical analysis because you do not enjoy reading or you struggle with reading? And I really, in my opinion, based on my experience in the market, this is why so many people try to solely depend on technical analysis or what they believe technical analysis to be, is because they don't want to read. Okay, we know we got 130 million Americans that read at 6th grade or lower. Okay, we probably got another 25, 30, maybe 40 million, and this is just an assumption, that probably read under high school level. And I think the reason why so many people come on the internet, right, and they get introduced to the markets via some type of social media situation, and they buy into technical analysis is because they don't enjoy reading or they struggle with reading. Therefore, if I believe I can make money in the markets and I don't have to read anything, that's what I want to do. Because I don't really want to read. I don't want to read documents. I don't want to read earnings. I don't want to read balance sheets. I don't want to read anything. I just want to look at charts and try to break down diagrams, even though I don't know how to do that. You know, I don't know how to look at a personnel group on a football field and determine based on their personnel group and what I think they're going to do with the football. I don't like doing that, but I want to now go do that in the markets, where essentially you're looking at a chart and they try to determine where you think price action is going to go based on the chart. And so I think that's something people really want to ask themselves. Do I just dislike reading so much, which is why I try to just do everything based on technical analysis, because I really don't want to read anything. Okay. Here is Goldman Sachs, their website. All they do is put out reports, investors' notes, things of that nature. When you really get into the finance space really deeply, it's a space of reading, right? It is. It's a space of reading it's a space of reading printed material, right? Everybody in this space that works for a firm has to publish. They can't just hand you a chart. Our chart's important, yes, but in the actual real finance space, right, they actually do a lot of written material. And you need to read a lot of written material to understand what's going on. And it's interesting that in the internet world, everybody just wants to depend on the chart. And I think that's something that a lot of people are going to continue to struggle with. I'm not against technical analysis, but I'm against people thinking it's a way to escape learning how to read. You're never going to ever have me be an advocate for people reading less. I think most people need to read more, right? I think they need to read more. It's like they need to exercise more. They should read even more, okay? And I think that's what a lot of people are doing, is they so much want to avoid doing any reading that they try to figure out, how can I make this work for me without doing any reading? And I'm here to tell you over and over again, the market is always going to expose who you are. If you are not comfortable reading, if you don't like reading in your regular life, the market will find a place for you to operate in where you don't have to do any reading. And it'll just continue to take your money from you. And then you'll leave the market and you'll still be the same person you were when you came in, because you didn't want to work on that process improvement, which maybe I need to raise my literacy level, right? Here's another example. NVIDIA put out their earnings. Their whole earnings is going to be in print, right? So they actually published their earnings in print. Okay, well, why did they do that? Because they were doing this before everything was on the internet. So they just never stopped doing it. 2, they have to publish it and put it in print because they got to file it to the SEC. So it has to actually be documented. Therefore, you can not only listen to the earnings, but you can download the press release and it'll be in a PDF, and everything that they're talking about going on the last quarter and what they're looking for in the next quarter is going to all be in print. So you can just sit down and read it. And that's what I want you to understand. In this space, it's very word heavy. It's always another document that you can be looking at. That's how they communicate in this space. It's not just we do a YouTube video or we do a video. It's very much the written word, print, things of that nature. And I think that's something a lot of people really want to kind of wrap their head around. Okay, let's go to the next one. If technical analysis is the holy grail, how come you can't code it and have fabulous success? Right? If all I need to do is figure out what this particular pattern is, How come I can't code that and then get success? Because it should be easy to do, right? We got enough people in the space in the world that are quants, programmers. I should be able to code this particular pattern and figure out every time this pattern shows up, I'm successful. Well, if that's the case, then I would have a 100% win rate. If that was the case, then every fund would just do that, right? Every fund would just hire a quant to just figure out when this technical pattern shows up, and we just trade that technical pattern every time it shows up, right? That's not really how quant trading works. You understand me? So when you really understand how the space actually works, you know that that's like Aladdin's not based on let's just find a technical pattern and trade it. That's not what Aladdin is based on. And people that don't know what Aladdin is the proprietary algo put out by BlackRock. Aladdin's not based on that, right? So a lot of people, when they know you don't know how the space works, they can sell you things that are really based on a falsehood. But when you actually understand how the space actually works, right, you know that that's not possible. But, you know, I get a bunch of YouTube videos of people telling me they got a trading algo. Well, what is it based on? Because I can go create a trading algo right now, but don't mean it works. It just means I got a trading algo. You understand what I'm trying to tell you? You can't go to ChatGPT and ask them things about the market and ChatGPT give you the information back. But people were saying that we're going to be able to trade based on AI. Well, they haven't done it yet. So we already have supercomputers, right? So supercomputers already are not trading to where you don't need to have any human input. If you look at some of the top firms in the world, they're not trading just off technical analysis. They don't. That's not how it works. So does technical analysis work? Yes, I use it, right? But this idea that all I have to do is do this, that's communicated to people that don't know how this market actually works. That's why I don't argue with people, because I know what I'm actually talking about in this particular space, right? And there's a lot of data analysis that's done where you're compiling a lot of data and you're evaluating it, but it's not just, I need to find this chart pattern, you know, and if it's 2 points above the 50-day moving average, that means we buy, and that works all the time. Because then you could just code it and it will win all the time, right? And so that would be so easy to do that everybody would do it. Or once the Fibonacci is here, then we just buy and we sell. That's so easy to code. If that was the case, everybody would just do it, right? We're in 2023. It's not going to be difficult to build that type of program. So what I think a lot of people take out is the human discernment, right? They take out the human discernment. And so what they do is when they think that the human discernment is not important, they don't understand why they're not successful. It's because their discernment on whether to take the trade or not take the trade is bad. And I think that's where they don't realize that they're struggling at. Give me 1 second. And so that's what you get is you get a lot of people going back and forth over the topic, but it's real cut and dry. Just go build you out an algo based on your technical analysis and trade it. And then you should just make all the money. And it doesn't really work that way because there's always going to be off some type of discernment from a human being standpoint. Okay. So let's go to the next one. So why does the indicator work for one person and not the other? So if a person's teaching you, all you got to do is use this indicator that is supposed to be the special holy grail indicator. Well, how come it don't work for everybody? Right? Because all you got to do is just say, well, the RSI is this number. That means sell. Okay, cool. Well, how come that don't work for everybody? And because we go back again to the human discernment. So let me give an example. During the pandemic, they were selling everything, but they were really selling the cruise lines very hard because we know that the cruise is based on a lot of human interaction. It's based on having a lot of crowds together. Anybody that's been on the cruise, if the cruise is packed, is everybody living on top of each other. That's how people live on boats. The cruise lines was getting sold off very heavily. So all the technical indicators were saying what? The cruise lines were quote unquote oversold. Didn't matter. The reason why it didn't matter is because something that a lot of technical analysis people don't talk about, what we call positioning. People were changing their positioning in the market, which meant what? They were getting out of every stock that involved a lot of human to human contact, which most importantly was going to be the cruise lines, theme parks, and the airlines. Because who wants to be on the plane when you're being told that there's a communicable disease that'll kill you, and then you're going to be flying on a plane? So they were leaving their position in those stocks. So all the technical indicators were showing that it's oversold. It doesn't matter what that technical indicator was telling you, because they're changing their position in the market. And so that's why I tell you, when you just want to lean on the one thing and don't understand things from a holistic standpoint, and you don't have discretion in what you're doing, it can lead you down the wrong road, because it's not like flying a plane where you can fly a plane just based on your dashboard. But you as a person don't have to take into account that there could be some type of external situation to where, even though the dashboard is telling me something, I need to come in as a human being and I need to try to figure out what's going on. Right. And I think that's something that a lot of people struggle with. What they want to do is they want to take their own decision making out of the process, because they really don't trust themselves. Their life is a result of bad decisions. So as a result, they don't trust the decisions that they make. So they want to exclude their decision making out of the process, especially when it comes to making decisions with money. So they think, if I just can find on the chart that it says this and this and this, and it means buy. And then if I can find it on the chart where it says this and this and this, it means sell. Well, what do you say? Because at the end of the day, you're the administrator or the manager of this capital. What do you think about the situation? Then you're going to hear crickets, because I don't really trust my own decision making. My life has shown me that I don't make good decisions, even though I like to act like I do on the internet, you know, and in social situations, but really deep down inside, I don't trust my own decision making process. So I want to lean on this, but you still got to make a decision on the technical analysis. So either way, you can't pull your own decision making out of it. But that's why you got to ask yourself, with all these indicators, how come they work for one person and don't work for somebody else? Because all you got to do is just find it on the chart, and then you know what to do. Well, if that was the case, if that's all you had to do, it will work for everybody, right? Next one. Why so many indicators if they all work? It's another thing people don't ask. If all the indicators work, why we have so many of them? Right? Why is there 1 million indicators on every charting program? Why do I need 1 million of them if they all work? And so when people really don't kind of understand what they're really looking at, they don't ask themselves this. If you look at my technical analysis, I don't use a lot of indicators. Why? They're just redundant, in my opinion. They're all redundant. They're redundant because I know what the indicator is expressing to me, so I don't need the redundancy, right? But why so many indicators if they all work? And then people argue over what's the best indicator. Well, I don't understand why we have 1,000 of them. You understand me? And so this is what I want people to understand. Again, we're trying to get away from, I have to be the person making the decision, right? And so I think that's the issue. That's the issue the person had before they ever came into the market, is they have to make the decision. Because if you look at my charts, I don't do a lot of indicators. I don't, because they're redundant, right? I don't need 12 indicators to tell me the same thing. I just don't. It's like me having 5 speed gauges in my car. I only need 1 speed gauge. I don't need 5 of them, because they're only going to give me one thing, which is what? The speed of the car. So what I need 5 of them for? Okay. So I want to really get people to consider understanding the market from a comprehensive standpoint as action to get the success that you desire. I'm not against technical analysis. I use it. I use moving averages. I was able to help somebody in my course learn how to, I didn't teach them this, but they learned how to use the VWAP, and they learned how to use the VWAP so good, they retired themselves from working, and they just trade, and they got another business they run on the side. But they use the VWAP. But nobody really talks about the VWAP. This person just uses the VWAP, and they trade index off the VWAP, and they've got so good at it, they quit their 9 to 5, right? So, but if you talk to this person, they can break down the market and a lot of other things because they understand what's going on around them, right? They're not just looking at a chart and say, okay, that's what they understand what's going on around them. They understood why the market sold off today. It's not just technical. There's a fundamental reason why the market sold off today. They understand why. So then they use the VWAP to guide them in their discernment. But they're not just saying, well, the VWAP says this, that means buy, and the VWAP says this, and that means sell. You understand me? And so what I try to do is help people get a comprehensive understanding of the market. Some people don't want that, right? That's just how they are. Some people don't want, they want things to be real binary. They want things to be real, very simple. I try to simplify things as much as possible, but you can't, you know, a car still is a drivetrain and a transmission. We can't make it simpler than that. Then you got to understand what I mean by that. Right? Still a braking system, still a cooling system. So you can simplify, but you still got to understand how those systems function and how they work. Right? But I would always encourage people to get a comprehensive understanding of the market. One of the biggest challenges a lot of people have is that they come into this space in desperation. And then now they're looking for the quickest turnaround as possible. So what's the quickest turnaround? Well, I just have to memorize some chart patterns. I don't have to really, I don't want to go talk to David because David's telling me I got to learn how actual markets work. Hell, I don't want to be an economist. I just want to make some money. So I just go memorize some chart patterns. And I believe if I just memorize some chart patterns, I can make money. That's the easiest way for me to get what I want. And we know that people in marketing, you learn that people want the easiest way to get what they want. Right? That's what they want. They want the easiest way to get what they want. I want to get the status of going to college. What's the easiest way? Take a loan. If you told most people, the only way you're going to go to college is to spend your own money, a lot of people won't want to go to college no more. But we got an easy way. Just take some money out of the bank. Take their loan, take their finance, and now you can get the status of going to school. People want the easiest way to get what they want. So it's marketed to them. You just got to learn this technical indicator. Now that's going to be the easy way for you to get what you want. Because I'm telling people, you got to be listening to earnings calls. You got to listen to when Jerome Powell speaks tomorrow. You need to listen to that. You need to understand what the bond market is doing. I don't want to do it. That's too much work. I just want to make some money. And I'm desperate. So let me go just try to figure out how to read this candle. Right? And so that's what I want you to understand. Let me show you something else real quick before we get up on out of here. Because I'm going to show you the difference in something a lot of people don't understand. So what most people are looking at, which is real weird, right, is these type of candlestick patterns. Okay, let me open this in a new link. Let me put that here. And so what most people are looking at is what we call Japanese candlesticks, right? Now, the question you want to ask yourself is that why is everybody fixated on Japanese candlesticks? Let me stop this screen real quick and show you what I'm talking about. When did Japanese candlesticks become like the thing? Right? That should be shown in the chart. When did these type of candlesticks become the thing? Does anybody know that? When did these type of candles become the thing? It's called Japanese candlesticks. Why does everybody use Japanese? That's not the only type of candlesticks out there. But some reason it's become like a standard to use Japanese candlesticks. So let me see, can I pull my Yahoo up real quick before we get up on out of here? If I can get it to come up. So does anybody that's watching know why everybody uses Japanese candlesticks? NASDAQ still down 118. Right? So was there a technical pattern yesterday that showed us that the NASDAQ was going to be down 117, 118? Let me go to these candles. Okay, there we go. Okay, so why does everybody use these? And let me show you. Why do they use those? So let me show you something different. Let me stop the screen. So those are Japanese candles. That's what everybody uses. Right? And let me bring this up real quick. Here is that. Let me share the screen. So these are the type of candles I like. I don't even know what they call. The reason why I like these candles is because I like to look at moving averages. And so when I'm looking at moving averages, regardless of the time span, I can see where the high, the open, the close, and the high and low of the day are in relationship to the moving average. But nobody uses these candlesticks. It's very rare to find somebody that uses these candlesticks. But to me, these candlesticks are easier to read, especially like me. I look at a lot of moving averages, right? Because to me, you can trade just off moving averages. You don't even need any other thing. Especially as me, as a swing trader and a longer term trader, you can trade off a moving average, right? But nobody uses these candles. Now, they're available on Yahoo. But if you get most default charting platforms, they're going to all give you Japanese candlesticks. So why are we looking at Japanese candlesticks when inside the United States? And I'm not saying that from a prejudice standpoint. I'm just trying to figure out, how did everybody in the West adopt Japanese candlesticks? But to me, they're difficult to read. To me, these are easier to read, but nobody uses them, right? So I just teach everything in the Japanese candlesticks because I know that's what most people are going to understand. But these are the kind of things people really I don't think they really wrap their head around, is that this idea that all you need to do is learn this technical pattern and you're going to be successful trading. I think you kind of want to really decide whether or not you really want to dedicate yourself to this, right? Because I can take any market activity and chart it. So I can do real estate, I can do commodities, I can do anything and just chart it. Can I be successful in the real estate market and know when I should be buying and selling a house just based on me charting the real estate activity in my environment and then me finding a pattern on the chart and then saying, okay, I should buy? Aren't there like people involved, and isn't there market sentiment involved, and isn't there how the cost of capital is going to impact the market? We know now that because the cost of capital is so high, people are sitting in their homes. They don't want to sell, because who wants to sell a house that you bought at 2% or 2.5%, and then I got to go out in the market and buy a house at 8%, right? But can I just chart all my local real estate activity, and then based on me finding this pattern on the chart, I know what I need to do as a real estate investor or as a real estate agent? Like, is it just that simple? Right? So I'm a big fan of charting. I'm a big fan of data, but I'm also a big fan of context and discernment. And I think that a lot of people that teach technical analysis, they don't teach that. And I understand why they don't teach it, is because their audience really doesn't want to learn that. They want to just try to figure out how to get to the money as fast as possible. So what I do is I teach you something that's going to be very simple and get you to believe this is how you're going to get to the money as fast as possible. And that's all you do. And I'm not against it, right? I'm not against it. It's marketing, and it's a segment of the market that wants that. That's why they're attracted to it. And I know some people that are really, really good at technical analysis. I got them in my course. But what they don't teach is you don't have to learn anything in context to get there. Lance don't teach that. Chastity don't teach that. They don't teach that. And they do a lot of heavy technical analysis. And so that's what I want people to really realize. It doesn't matter whether you're doing this or you're doing something else. As long as somebody can market to you and tell you you can get this big result with very little work on your end, you're going to keep falling for it. You're just going to keep falling for it. It doesn't work like that in this world, right? But everything is marketed to people like that. They're getting ready to put out a diet drug and make people think I can lose weight just if I take this drug. That drug will be the biggest thing since crack cocaine. Because why? It's selling people what they want. I can get what I want. I ain't got to do no work. That drug gonna be bigger than crack. Watch what I tell you. That drug will be bigger than crack cocaine when they get ready to release that drug, because it's selling to what people really want. I can lose all my weight. I ain't got to do nothing. They've been waiting for that their whole life. So I'm telling you is that I want to encourage people to get a comprehensive understanding of the market. May it take longer than what you anticipated on the onset. Yes, but anything that you're going to be good at and anything worthwhile, in my opinion, you got to put some time into it. And when you want the market, I think I made I made maybe $500 a day. Ain't nothing crazy, but I made $500 a day, right? Off that big drop on the Qs. But I didn't learn how to do that in 60 days, right? And I had to take the discernment to do what? To exit at profit. Once it started to bottom out, and that's when the technical analysis came in. Once I started to see that the price action was starting to consolidate, what did I do? I sold my position and got out of the market, right? I was already up 40, 50%. I was up maybe 35, 40%. It don't make no sense to lose 20% trying to get another 10%, trying to get a 50% return. I was up like 38, 40%. I exited. But I didn't get here, right, just because I knew what chart pattern I need to look at, and I figured this out in 60 days. I've been at this and I keep studying, I keep learning, I keep applying myself, and I pay people to teach me what I don't know that's better than me so I can get better and better so I can teach the people around me so they can get better, right? So this is a process. It's not an overnight situation, right? So we're going to read the super chats. I ain't want to be up here long, and I'm doing an early live because I got to do something later on. So I'm going to go ahead and get that out the way. So big up to Taz, man. Appreciate the $5 super chat. Big up to Corporate Checks TV. Appreciate the $1.99 super chat. Let's read these comments. So any questions, let me know before I get out of here. So Miss Lady L, hope you're doing good. What's going on with it? So Miss Lady L, that was a pre-snap read for quarterbacks. So they teach quarterbacks when they get to the line of scrimmage. I know you may not be into football like that, but they teach them when they come to the line of scrimmage, there's certain things they need to look for on the field to understand like what they think the defense is getting ready to do and how they need to execute the offense. Where should they put the ball based on that? Same thing on defense. I'm in the state of Florida. We're taught on defense, when your personnel groups come on the field, you count the personnel group to try to figure out what kind of play you think they're running, right? So we were counting it, and you take into account the down and distance, right? So you can look. So let me give it a good analogy. In football, I can always look at your film to learn your tendencies, but I still have to use my discernment on what I think the situation is, right? And so that's the thing, is that I can look at all the film I want to look at of a team and say, okay, this is what they do 80% of the time. But I still got to take into context, what's the situation we're going through right now? And that can determine why I think they're doing this or that, because a lot of teams will give you the same formation, the same personnel group, but do something different out of it. So that's why the person's discernment got to come into play. But that's a whole nother conversation. I don't want to turn this to a football conversation. So Leon says, is the PDF available to past purchase option trading program? No, it's not. Currently, it's only available to new purchasers, right? As part of a promotion. I'll put in the community wall what the topics are. It may be available later. It may not be available later. We want to put it out as a promotion, see how people take to it. Because if the people don't want it and they're not willing to pay for it, we'll just put it back in the vault. Because we know the information is valuable. We ain't going to beg people for it. Jay Preston, man, what's going on? GC, what's up with it? Okay. Yeah, BlackRock software. And they also licensed, I think it's called Aladdin. They also license Aladdin out to other firms. So that also defeats this idea to where, well, you know, if you have a software, why would you sell it to anybody else? Like I said, once you learn how these markets actually function, these people who don't know, but they think they know because they passed somebody's test, they can't tell you what is going on. So BlackRock spent probably billions, I don't know, but I know they spent millions developing Aladdin. They also license Aladdin out to other firms because there is no edge in just having a software. The edge is understanding how to apply the data given to you by the software. Just having the software is not an edge. And I think a lot of people don't get that, right? Software, especially computing now, is so advanced. They can look at what you're doing and like people got to realize, like you can look at it's this particular, it's like trading software, and you can see where like Goldman and JP Morgan have pinned the stock market, right? You can see options collars on the stock like this. None of this stuff, information is hidden from anybody. It's the positioning that drives the market, right? And I think a lot of people really don't get that. It's the positioning that drives the market. It's the capital flows. It's the inflows and the outflows that drive the market. What did we see this morning? We saw massive outflows. That's what drove the market down, right? And so there's a process, in my opinion, of people understanding this. Just like there's a process to where I was watching Hard Knocks. So you got Aaron Rodgers, and they play the Panthers on, like, you know, they do the practices over the offseason. They practice against another team, so they get tired of looking at their own people. He was talking to the dude from Alabama that's a rookie quarterback. Aaron Rodgers knows things about football he don't know yet, because why? He ain't played football long enough, right? So you pick up more stuff the longer you stay in the space. So for a person that's coming into this space, I'm talking about capital positioning. They be like, what is he talking about? Because they ain't been around long enough to understand that. What you saw this morning was positioning, right? It's positioning. What we've seen in the market, in the tech space over the past 8 months now, but it started at the top of the year, that was positioning, right? That was capital on the sidelines going back into the market. That's what's moving the market. Then everything else is a byproduct of that. but that's what's actually moving the market, is money in and out of the market. GC says, I met a dude who's a quant, had his own algo that was based off oil, gas, and efficiencies due to some pipelines not being built. And once they built the infrastructure, he lost a lot of money. Yeah, that's something else, GC. Edges. Edges are very powerful, but the edge never lasts forever, right? Edges don't last forever. So I agree with you. You can build an edge off of inefficiency in the market. Edges don't last forever, right? I got with a, I wouldn't say there was a quant, but it was somebody that could aggregate me a lot of information, and they helped me develop my lockup process, right? Now, other people know about that, but it's not something that's widely used. Eventually, they will create a way to make that the way it doesn't happen anymore, right? But yeah, edges are real powerful. I want to create an edge on the indexes in the 10-year treasury, because they still haven't fixed that. But it's situational. It don't always happen, but it does happen more than it doesn't. But to find people that can do that, GC, is not easy. A lot of these people got programming degrees, man, but when you ask them to start creating programs that can actually aggregate a bunch of data and it kind of show you trends in the data, they struggle with that. I think that's past their training. So L Light says, student of the course, I do 80-20 fundamentals, 20 technicals. I do not use a ton of indicators. I've had success. Yo, big up to you, L Light, and I'm happy. Do what work for you, right? Do what work for you. I know some people use all technicals. There's a white dude named Al Brooks. He teaches price action. All he does is price action. But why is he so good at it? He's been doing it for so long and he don't do nothing else. He don't jump around, right? And he'll tell you he didn't get good at it in 60 days. So, and a lot of people are teaching his stuff in the market. Quiet is kept because he don't really promote himself, right? But he teaches nothing but price. Now, he don't call it technical analysis. He call it price action. He teaches nothing but price action. But he'll tell you, like, I didn't get good at this in 60 days. I did this for a very long time to where I can look at the candles and tell where the market is going. Because, you know what I'm saying? So I think that's something that a lot of people struggle with, is they want to be an expert at something in a relatively short amount of time. And so if I tell you, if you're just going to only do technical analysis, then you just got to lock in on that and just do that for years. And then you'll look up one day and it'll be easy to you because you've done it for so long. But big up to you. And like I say, do what work for you. So G says, when I first started trading, those are my default settings. I feel you. So Outlaw says, institutional traders on Wall Street don't even use candlestick charts. A lot of them use order flow. Your order flow is something big too. Now here's a problem with order flow, Outlaw, to PBS. You can spoof it. See, so there's always something that can throw you off because there is no 100% thing in the market, right? So you can spoof it. A dude just going to jail. He just got sentenced recently. Forgot what bank he was working for. He was spoofing, I believe, I think it might have been the gold market, but it was one of those commodity markets. He was spoofing it. You may know about Nev over there in the UK. He created a program to spoof the spoofers, right? And made big money doing that. I think he might be in prison right now, or maybe he out. I don't know. You see what I'm saying? So you can use order flow, but then you can spoof order flow. That's why guys like Al Brooks say he don't like order flow, because you can spoof it. Yeah, you can spoof it. You can put orders there and pull it back. And then the algos will trade based on the orders they see on the order flow, but I can put the order there and pull it. And then put it back, then pull it. And then trade around how people are reacting to me placing orders on the order. Because I look at order flow and I can see where we're trying to pin the stock price. Then you'll see that pin get pulled. And then the price action will start going in that direction, then it'll come back. Everybody is trying to do something to make money in this game, right? And so if they can manipulate the structure of what they're doing, that's what they're going to do, as long as it's not illegal. And some people even do it if it's illegal. So you can spoof order flow. I look at a lot of options flow. Options flow to me, you're going to make money because you don't know why the person's buying the option. They could be buying it because they're directional. They could be buying it because they're hedging. That's why I tell people you got to have your own discernment in this stuff. There is no binary way to make money in any market. It just doesn't work. Like, it just doesn't work. Markets are inefficient by nature. Miss Lady L says that was a timely live. Okay, I'm glad you getting value from it. So Jigga says, what's the difference between Japanese candlesticks and the sheet candlesticks? To me, is I can see moving averages better on the second ones. I don't like Japanese candlesticks, but I use them because that's what everybody else uses. So I use it to create some common ground with people. But I don't like them because I trade a lot of times on longer term trades, and I can see the move. I trade off moving averages a lot. I can see how the moving average line. I want to see whether or not the price is closing above or under the moving average, because sometimes I can determine whether I close my trade at. So price action is the most important factor for a trader. Okay, I agree. If that's what you believe and that's what's making you money, I'm all for it. So I know CMTs, CFTEs, who look at a lot of different factors, technical, fundamental, quantitative, and behavior are the main ones, but they tell me to look at the world and how the market moves it. Yeah. I mean, I look at a lot of futures traders and I read about them, and a lot of them just do fundamental. They don't even look at charts. They do fundamental, and they do what I teach also is that they do profit taking and losses. So, you know, and a lot of people have told me that I really am a commodities trader. I just don't know it yet. But I know I look at a lot of futures traders that trade commodities, and all they do is fundamental, and they look at profit and loss, and they trade off that. And they don't even really look at charts, because their attitude is that stuff ain't what's moving the commodities market. They, in their mind, what's moving the commodities market, what's going on in the world. Right? So everybody got their way in which they get what they get. But I want to really encourage people to stop thinking that there's a trick to this. Ain't no tricks. There's no trick to this stuff. There's no trick to any market. Real estate, no, there's no trick to it. Right? It all is you applying what you learned, and you just commit yourself to it. Yeah, definitely. Institutions break the law all the time. All the time. Because we just know about the people that get caught. We don't know about the people that haven't got caught. But yeah, they spoof the hell out of order flow. Right? That's how they manipulate it, because it's being traded off computers now. So if the computer sees certain orders come in over a certain quantity, it'll change its behavior. So that's what Nev figured out. Right? And then he got caught up because he was spoofing the spoofers. I wish I would have known that, dude. I would have said, man, tell me what you traded on. I'll just mirror your trades, because I knew he knew how to spoof those people back. He made a lot of money off that. They stole his money, though, which is a whole nother story. So they have access to billions of dollars, create whatever they think give them the best edge in the markets. Definitely. And a lot of times, GC, if you have the money, that's what gives you the edge, because people will trade off of positioning. Another thing is that fund managers can't miss out on moves, especially to the upside. So we start seeing all that money going into tech. Everybody chased it. That's why I say positioning is really, really important. Right? But I don't think people are ready to hear that positioning concept yet. AUM helps you really move the needle on the sector, definitely. So what do I think of tape reading? I think if it works for you, do it. I'm not against anything that works for you making money, right? As long as it's legal. If it works for you, go for it. I don't have a opinion. Like I said, people come to the internet looking for a process, and they're looking for comments on a process that they're going to have to do. If you're going to tape read, I would encourage you to be the best at it, right? I'm only going to look at so much order flow before I'm going to stop looking at it, right? It's only so much I'm going to look at during the course of a day before I just get tired of looking at it. Just the way it moves, it just gives me a headache after a certain amount of time. I know other traders will look at order flow the whole day of the market, and they will base their trades based on that. I don't like it, because it's easy to manipulate it, especially on very liquid trades. But that's me. It don't mean you shouldn't do it. I think people suffer from asking people what they think about a process that they're eventually going to have to do to be good at. So it don't matter what I got to say. I could be the most biggest proponent of it, and you still got to get good at it. Or I can say don't do it, and it still don't mean you shouldn't do it, because it may work for you. A lot of people make money off that. I just don't. Right? Chassie's real good at reading tape. I'm not as good as her at reading tape. She's way better at it than me. Right? So do what works for you. So most SWEs are only good at creating web pages using the same folders and models that have already been created. When it comes to actually developing models from scratch, they can't do much. Yeah, I agree with you. But you see a lot of that in, and I don't know if this correlates, but you see a lot of piggybacking in academia, where they only take something that's already been established and then they just kind of expand on it. But like you say, creating something from scratch is difficult. my biggest challenge is finding somebody that can do it, because I see that there's a lot of inefficiencies. I don't know how to create the coding around it, and then how much would it cost? And a lot of really good traders do have research teams that give them aggregated information. And that's really what they're trading off of. And so you want people that can do it, but you got to find the right people, and they have to have the ability to do it. So I don't know what it is. I got to figure something out, because one thing I know, and you're seeing this a lot now, GC, nobody's buying Dow. Eventually they will, because why? Everybody's going to be overpositioned in tech. And it really don't make sense. I think the 10-year is 4.3. I think the 2-year is 5. After a while, it's not going to make sense to keep buying tech, because everybody's just going to be overpositioned in it. So they're going to start looking for other places to put their money. So if I could create software that can show me a correlation to where, if these conditions exist and I get that 10-year over a certain amount, where do the flows start going? I could trade off that, because like I said, I did the same thing for the lockup course. But it's hard to find somebody that's going to be a lot more variables in it. It's hard to find somebody that one even understands it and then can code it out for me, because I want to get more into that stuff in 2024. Also get with some accountants to do more research work. But you got to have the right team. But that's really how you make money in this market. The reason why Kathy Wood can do what she does, because she got a whole team of people around her that they doing just research all day. And I don't know how she comes up with some of her price targets, but she does have a team. That's why I said is that technical analysis is one part of a bigger picture. And I think a lot of people missing out on the bigger picture because they just looking at the one part. But God bless them. I hope it work out for them. Yeah, you definitely. Academic and fraud is crazy in the academia. Yeah. What's going on, Katrina? What's going on up out there in Texas? Glad, hope you are doing well, and it ain't too hot, because it's super hot out here in Atlanta. Man. So how do I differentiate between a genuine trend? So how do we define genuine? How would you define genuine trend and market noise and technical analysis? And then how do you define market noise? Right? So the question is, what is your definition of genuine trend? What is your definition of market noise? And then the question is, does your definition match my definition? Because if my definition of a trend and market noise is not the same as yours, it may not matter what I tell you. So do we have the same definition of what those mean? Or do I know your definition so I can answer it based on your definition? Right? So if I look at 250 and I say, well, I trade off moving averages, and you look at 23 and I don't know, 18 or 8, well, it don't matter, because we're not looking at the same moving averages anyway. And then our analysis based on, see, let me explain something to people. And I'm not talking about UG Adams. I want people to understand this. Whatever you believe about the market that's how you're going to trade. So it really don't matter what the technical indicators are. If you're bullish on the market, you're going to trade bullish. If you're bearish on the market, you're going to trade bearish. Everything else is really not relevant. And I think a lot of people don't want to admit that their own psychology determines how they trade. The majority of my trades are bearish because why? I don't have confidence in most companies, right? I don't, because of macro situations. I'm looking at, I don't know what Enphase was trading at now. I was trying to buy Enphase puts before I got on this live stream. If cost of capital keeps going up, man, nobody's buying solar. So it doesn't matter what a technical pattern tells me, I'm bearish on solar, because that's my own psychology right now. So I think a lot of people, when they're trading, they don't really look at their own psychology and ask themselves, how does that determine what trades I make? They want to believe it's, like I say, they don't trust their own decision making. I trust my decisions, right? I have 100% confidence in my decision making, right? I done made some real decisions in my life. If I don't trust my decisions, man, I'm ridiculous. I'm tripping. But going back to what you were saying, Mr. Adams, we would need to determine, how do you define genuine trend? How do you define market noise? How do I define it? And whether or not we have some commonality in our definitions for me to really answer that question. Outside of that, it's just, it'll be word salad, right? And no disrespect to you and your question. That's a good question. Yeah, it's going to cost. Yeah, definitely. And no doubt about that. To find the right people to do it, that's going to cost. But I need to get that kind of team together. There's a lot of money out here that could be made if I could get people to crunch some information for me, or either find a statistical analysis program and just learn how to use it on a basic level. So GC says, I've seen people create those type of models of getting 300K straight out of college. That's just based on bonus. Yeah, they're telling a lot of people. I was listening to somebody on Twitter the other day. If you want to make it in finance, you need to just have a really, really strong mathematics background, because everything's now is quants, right? So we're in this quant era. And that's what I was saying, that TA was the holy grail that people said it is. They could just get these quants just to code stuff out, right? So that's why I don't believe it is. Do I believe you can make money off of it? Yeah, definitely. Do I believe all you need to do is learn TA and you're going to make a gang of money? No, not long term either. Because there's too many good quants in the finance space. They would just model out, you know, we're 2 ticks above the 50-day moving average and we're at this particular pattern. That means buy. And then they would just have the computer locate that on every chart in the market and they would just buy. I don't think it's that easy. I really don't. I think it's a little bit more complicated than that. But yeah, I know somebody was saying if you want to make it in finance, your mathematics background got to be on a high level, because that's what they're doing now. They're just crunching a bunch of numbers. But I think that's a trend, GC. I think once the AI, what they're calling AI, gets sophisticated enough, they're going to get those people out of there, and then they're going to go into a new era of artificial intelligence giving them the data that they want, because it beats paying that person. You can have that artificial intelligence working on models all night while you're sleeping. So I think once they figure out what models they really need, they're going to start teaching computers how to do that type of modeling, and they're going to get the people out. It's like, I think artificial intelligence is going to eliminate all financial planners. That's a whole nother conversation. Because if I can create a model of financial planning, and most financial planning is done off of a template, and I can have a computer do it, what do I need a person for? Right? So I think this era that we're going into, a generative AI, is going to get rid of a lot of computing and data aggregation and modeling and forecasting that a lot of humans were doing. I think the computers are going to do a lot of that, and then they're just going to use 1 or 2 humans to just interpret it. But I think the actual processing and legwork of it is going to be done by computers, in my opinion. Right? So Katrina says, let me watch it come back. Yeah, just check it out later. I think you should. Must say this. Hopefully you get some value from it. I don't want to make an assumption. So Wallace says TA is kind of a scam. So I wouldn't say it's a scam. What I would say is that I think people don't understand the limitations of it, and they don't understand that they need to develop themselves past just looking at a chart pattern, right? But I think it attracts a certain type of person in the market to where they're looking for an answer, and they don't necessarily want to invest the work into getting that answer. So they think the TA is just going to give them the answer. And hopefully it works out for them. So that's it. We're going to get up and out of here. Hopefully you got some value from it. If you got any questions, hit me up in the comments. I'm going to get out of here because, like I said, I'm still looking at these solar companies. I may want to jump on something before market close, and we'll see how the market opens tomorrow. So y'all be easy, man. Talk to y'all later.